I still am absolutely baffled by the lower quality of U.S. automobiles versus Japanese and some of the other places around the world. Like, it's just shocking.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. It is only intended to provide education about the financial industry. To determine which investments may be appropriate for you, consult your financial advisor prior to investing. Any past performance discussed during this program is no guarantee of future results. Any indices referenced for comparison are unmanaged and cannot be invested into directly. Any references to performance of securities are thought to be materially accurate and actual performance may differ. As always, please remember investing involves risk.
And we are back with another edition of the Daily Dots. Today we're talking about trade, tariffs, and Tesla. Oh my.
Triple T.
How do you like that?
Like terrible Terry Tate, the office linebacker.
Yeah, terrible Terry Tate.
Hold on. If listeners don't know what I'm talking about and you want to have a good time, go pull up those YouTubes.
Yeah.
Crazy Reebok commercials from I don't want to talk about how many years ago.
The office linebacker.
It was the best.
Just people getting laid out in the middle of the office.
The pain train's coming. Woo woo.
But you're not a cameraologist, which I just figured out.
It's true.
Yeah. Anyway, I'm not even going to take you guys down the track of why we coined the term cameraologist. You don't want to. There's certain things you don't want to know, and my job is to protect you from those things. So anyway, okay, so we got some earnings out. Plenty to talk about today. But why don't you give us a rundown? Let's start with the indexes and see how we finished.
Yep. S&P closed up 0.78. I'm not popping up on here at all.
Oh, hold on.
But people need to see my face.
Yeah,
there we go.
They would. Yeah.
For podcast listeners, apologies. All right. S&P closed up 0.78. The Q's up 0.46. Small caps continue to be in beast mode, up 1.5. Although if you zoom out on the chart of IWM versus anything, it's still pathetic. Equal weight up 0.83, Mag 7 up 0.4. The dollar down another 0.2. Barely holding 97.20 now on the dollar. Oil up a smidge, gas down a good bit on a week 2 weather model being pretty ugly. Gold down about 1.3. Vol got smashed thanks to the Japan deal more than anything, I would say, down about 4%. So you're barely holding 18 now on Vol. That about rounds it out for the day. And then we do have some big earnings going on as we record, but and maybe we'll touch on where those things are. Actually, not much movement though.
No, not much movement.
Although Texas Instruments, we did get huge movement there, down like 13%
yeah,
today.
They got smacked.
And one thing to note there real quick was they basically, the reason was they disappointed on guidance. And the reason they disappointed on guidance was they were like, look, we're afraid a bunch of this heat was people front running tariffs. So we're like being cautious about the next couple quarters. And the market was like mad about that because the market was basically extrapolating the demand and they were like, we're not sure. And that was just notable because that's something we talked about a couple months ago.
Yeah, you know what? And that's something that we haven't revisited recently. And my whole take on that is, I think when you look at the data, it's undeniable that dynamic took place. It's undeniable that it juiced first quarter returns. The question is when we get, if and when, and I'm going to say if, because I'm assuming it's coming, but if and when we get this whole tariff trade deal stuff behind us, the question I've got, I don't hear anybody factoring that in.
Nobody cares. Yeah.
Yeah. It's going to create a demand air pocket. How big, it's kind of impossible to tell. And could be greatly influenced by the deals that are cut, right? The trade deals where we end up could greatly impact all that stuff too. The thing that I find hilarious about this market, well, there's a lot of different things that are funny. It's odd how this market values things. And by saying odd, I'm being very nice. Like if you looked at Google and you looked at the performance, you looked at the margin, you looked at every aspect of the business, you cannot come to a conclusion where you would be left scratching your head going, okay, clearly the market sees this as completely different than the other giant tech companies that it's that it's bigger than, that it outperforms, that it makes more money than, that it makes more profit than, greater revenue, greater growth, margins, all that kind of stuff. And then the market seems to always find a way to value it at half of its peers. It's the strangest thing. And I honestly, the longer this has gone on, the more and more, and I don't have the dynamics. I would love to ask Mike Green this question.
Yeah, we should do that.
Because it doesn't make sense on the face of it to me. Because they should both. Google has a 2-share structure. So I'm talking behind the scenes here. People are sitting there, what is he talking about? Google has a 2-share structure. There is GOOG and GOOGL. Okay. It's not 2 different companies. It's just, I think it's pretty close to 50-50. 50% of the shares are Goog, 50% of the shares are Google. And the reason they did that was so that Larry Page and Sergey Brin could continue own it. They could maintain their voting power, right? And still sell stock. And I can't remember exactly how the shares are structured, but it's like one has more superior voting rights than the other or something. It's right. Something fairly meaningless like that. But ever since they've done that, and it should not, I mean, this should have zero impact on the valuation of a company. It doesn't have any impact on how the company's, earnings are distributed to investors. It does. There is no downside to doing that. But in a passively driven world, and it literally, the deeper you dig into Google versus its cohorts, you're kind of left just grabbing at that because the valuation just doesn't make any sense. For Microsoft to be trading at literally double the valuation of Google makes zero sense. People are like, oh, it's because search is threatened. And I'm like, okay, well, first of all, go do some math before you make a statement like that. Go figure out how much that's baked into the cake. And what I would tell you is if you fully remove search from Google's, completely removed it, just gone, it would have metrics that were almost identical to Microsoft's at today's stock price.
Yep.
Right. It just continues to make no sense, but I will continue to say, and I'm not advising anybody go out and buy the company, but when you start looking at the FANG companies, I don't understand how you would overweight any of them, if not Google, especially at this price point. I mean, go find me some other companies out there that are anywhere close to $1 trillion in market cap that have 29.5% margins, 14% revenue growth, right? And that are trading at 20 times earnings or less. That's a list of one company, literally. So, it's frustrating owning it, but then you sit there and go to yourself, well,
but that's what you want to own. So.
Well, yeah. And you sit there and go to yourself, well, if that dynamic didn't exist, you wouldn't own it.
Right. Exactly.
If this thing was trading at 42 times earnings,
being a value investor, it's just professional frustration anyway.
Yep. Over the short term.
Or as I saw the other day on Twitter, somebody said, we need to come up with a name for nerds that aren't smart. And then somebody said, value investors.
Boy, it feels like that at times, man. It does feel like that at times. Tesla earnings come out.
Now we're in a negative. It's the double miss, I think it was.
Yeah. Well, and I don't know, like I said to you, I don't know if you're bullish here. I didn't understand how. And the results
quarter after quarter after quarter.
And you're still floating around at 190 times earnings. I mean, this company, I think that this is too hyperbolic to say this, but I keep coming back to like melting ice cube. I mean, and it's just the fact that thing is still, you pay 190 times earnings for something that is growing, not shrinking. It's just remarkable. It's just remarkable. But I would say this.
Speaking of the chart that I shared on Twitter yesterday, it was basically if you took Tesla, divided it by 3, and it was still going to be more expensive than the rest of Mag 7 if you divide it by 3.
Yeah. That's
all you need to know.
Yeah. So that covered, those are the two biggest earnings stories of the day. Throw in Texas Instruments. We've pretty much covered those. The return of the meme stocks, though.
Thought we were going to go Japan. We want meme stocks.
Well, we can go to Japan. We can go to Japan too. So the Japan trade deal, first and foremost, trade deal, 15% tariffs. I'm sure, assuming there's nuances and carve outs in that number. I think the biggest thing that stuck out when we were discussing it earlier was that the 15% tariff, Japan isn't paying 50% tariffs on steel.
Yep, steel and aluminum and copper and
and we are
right.
So hitting them with a 15% tariff means that you just increase their competitive advantage in the United States, even after they pay.
Yeah,
because they're
probably
not
insignificantly.
Because they're not. Now, what about cars manufactured here in the U.S.? They've got to pay tariffs on the steel and aluminum and stuff like
they're
that.
almost. This is kind of the weird part.
You
of it,
almost incentivize them to make them in Japan,
right? Which is obviously not what we're trying to do. And they did, I in some form or fashion that's not legible, say that they're going to do, a little over $500 billion in FDI. You would think some of that would be, along the lines of maybe another plant or two, but
tell them what
not,
FDI
not
is.
if that's the case. Sorry, foreign direct investment, and no one has put any time frame on that. What that means. So
that's such an amorphous number. Yes. Anytime somebody ever says
that's over a decade, they're already going to do that.
Yeah, right. Over the last decade, I think they invested something like $440 billion in the U.S.
Exactly. Yep.
So
you're talking about with inflation, they were going to do it anyways. So I don't know.
The one thing I will say is looking at that trade deal made me think, okay, this doesn't make sense on the face of it. There's no way Trump's going to there's no way he's going to cut a trade deal with Japan that puts Japan in the driver's seat in the U.S. market versus U.S. auto manufacturers, which leads me to believe, and I was just talking about this on another podcast, leads me to believe there's going to be some follow-up stuff. Either Trump is sitting there saying, okay, those auto manufacturers are not going to be paying that tariff on aluminum, steel, and other things, or there's going to be some kind of addendum. The one thing you could have a lot of talk about Trump and all this kind of stuff. The one thing the guy has been completely consistent on, and that I don't have any doubts about whatsoever, is his desire to get more manufacturing and put American companies in the driver's seat. So I've got to believe that trade deal, written the way it is, was written that way with the knowledge that other parts not yet revealed were going to come out. I have to believe that. There's no way you do that. If he
not without giant other wins, unless the FDI part was, it is on a tighter time frame than we realize, and it is going to be substantial, then maybe you take it on the chin on the cars or whatever. But
I know, but man, think about that.
To be clear, I don't know what all those tariffs add to a final price of a vehicle in the U.S. I know it's not nothing, that's for sure. My guess is it has to be around 15%, but maybe they did the math and it's like a wash. Who knows? But
yeah, well, that's the other thing. When you look at modern cars, and I'm trying to remind myself of that right now, the component cost, right? So the component cost in a car of steel and aluminum has been dropping like a rock for 30 years, right? Yeah. It's there, meaning as the price of cars has gone up, virtually all of that is reflective of additional technology placed in the car. It's not, better steel, or they're not using Valyrian steel, to go Game of Thrones for anybody that knows.
I don't. That's why I didn't make a face.
Okay. Well, fair enough. But that was the most. Now I've been doing another interview, so I haven't been digging in deep into that stuff as you have. Any other details out of that trade deal that we need to bring up?
It's very detail light, which is frustrating, but so they're going to buy some more rice from us. They're not going to buy more rice, but they're going to buy more rice from us. So they have like a quota system for that. And they're just going to increase the percentage that comes from the U.S. They're apparently going to buy some other ag stuff. No numbers, no specifics there. And naturally, they're going to buy some Boeing jets because that's part of everyone's deal. What's interesting, though, is like if you actually look at what tariffs they had against us, they really didn't have any except for like dairy and beef. They have pretty big trade barriers there. Other than that, they just don't really have
I
any.
thought they had fairly decent trade barriers on what kind of cars we could sell in Japan.
So no tariffs, but some non-tariff barriers.
Okay.
But I'll have to say, in my opinion, they could rip all those down to zero. We're probably not selling a lot of cars there. For one thing, you got to put the steering wheel on the other side, and who really wants to do all that in America? But
I didn't. You know what? I feel like an idiot right now. I didn't realize it. It must have been the British influence in Japan.
yeah, I don't know.
They
I
drive on
it
the
was
other
weird
side of
too.
the road.
I think I just learned that like in the last couple of days myself.
That shocks me.
But
that is so shocking.
Plus, I mean, Japan makes really good cars. They don't really need Chevys in Japan. I mean, right?
If I was living in Japan, I wouldn't be buying a Chevy.
No.
I mean, no knock on the Chevy owners out there and American steel and all that kind of stuff. But I mean, America lost the automobile race a long time ago. And I feel like they haven't even tried to reclaim it.
We're just good at the truck race. That's about it.
Yeah. You know, that's the other thing.
Giant SUVs. If you're one of those, talk to us.
I still am absolutely baffled by the lower quality of US automobiles versus Japanese and some of the other places around the world. Like, it's just shocking. You sit there and go, I remember, do you remember the old, what was the name of that movie? Michael Keaton movie, where the Japanese company came in and took over the US automobile manufacturer, and Keaton was like the liaison for like the union or whatever. What was the name of it? It's good, funny movie, good movie. But basically, he had to get his union guys meeting the Japanese production quotas, or they were going to shut the plant down. And anyway, really good. But I mean, that movie was in the 80s, right? And you go through a, and I own them. My wife drives a Denali XL,
I
like
have
a
GMC
Suburban,
truck,
right?
so,
Yeah. But the quality, the difference in quality between the cars is just shocking, right? Just the little stuff that breaks on her car, just that doesn't happen in the Hondas and Toyotas and Acuras and Lexuses that I've owned. It just doesn't happen.
And even the Germans, I feel like, aren't that good. Like, we just had a Volkswagen. It was a dumpster fire. Everyone I've ever known had a BMW. It broke all the time.
Yep. So I've owned a few. I own a German car now, an Audi. Here's been my thing on the German side, and I've owned a couple of them. The drivetrains are usually spectacular, assuming it's an established engine that isn't new. If you go one of their new designs, they can get a little shaky.
Whenever you throw all the computer stuff in there, they lost a touch.
Dude, it's the ancillary stuff that just kills you.
It was the same light over and over, and they just kept throwing a different part at it every time. They had no idea.
Yeah, they had no clue. Yeah, it's weird. But yeah, in America, the American-made automobiles, they're just it's always stuck in my craw where I'm sitting there going, there is absolutely no reason you guys can't make a car that is on par with the quality of, because it just comes down to engineering and tolerances. That's really all it is.
Right.
You know, this isn't rocket science, but here we are.
The opinions expressed in this program are for general informational purposes only and are not intended to provide specific advice or recommendations for any individual or on any specific security. Any references to performance of securities are thought to be materially accurate, and actual performance may differ.
What is the other stuff? What was the other news that we've got to discuss?
Let's see.
China tariffs.
So we also
Japanese.
Yeah, we also snuck in Indonesia, Philippines in the last couple of days. So we're starting to make some headway, and all three of those deals under 20%. To me, the best news is that we have more chunks of the world under 20%. Like having, I don't care who won the trade deal, like with us in Japan, just having them at 15 is a win.
Yeah,
for both of us, I think. So now you're kind of looking at, you still got to get Korea, but then Europe, and after that, like, I think you can stay status quo with China, and like everyone just will not worry about it. You probably do stay status quo with China, or close to status quo, but once you get Europe out of the way, and Europe today basically said they sound optimistic they can get 15 as well, then yes, you do still have high tariffs, but like, 15 you can, but between the multiple parties, they can eat some of that cost. That's not going to wreck the economy, right? Whereas, all this like 20s, 30s for dozens of countries stuff, like that was going to get interesting. And obviously the crazy levels we got to on China were not going to work. But point being, you can you can kind of see from here for the first time, I would argue, since April, like a sort of like post tariff view where no, I mean, the market hasn't cared for the last 2 or 3 weeks anyways. And turns out so far, rightfully so. But it looks like a thing you're going to be able to, I don't know, 80% ignore instead of like 20% ignore come August 1st, as long as the European thing goes okay.
Yeah. And they, all systems seem like that. There's a go there. It seems like there's an announcement. It's going to be right around the corner.
Yeah. We'll see. You can never know with these things, but it seems like it.
Yeah. Let's see. What else were we going to get to? I'm blanking all of a sudden.
Let's see.
Can't be that short. When was the last?
Interestingly, bond yields, down yesterday.
Oh, meme stocks.
While we got the deals real quick. And then, but today up about 3-4 basis points out on the long end. So it's almost like the deals are letting that go back up. Because if you think about the deals, now you start to like look at growth a little bit, hey, we're going to get some growth. We're going to get some inflation. Like neither of those things are going to be good for keeping bond yields down. And one other quick thing was it's weird, but now Bessent's kind of going to bat for Powell. So he's like good cop after being, at least in some ways, even himself bad cop. So anyways, go on to the memes.
Yep. Return of the meme stocks. We were having a conversation, kind of an odd, the meme stock thing irritates the living hell out of me. No, it's so nihilistic and it's so short-sighted, and it literally feels like everybody's running into a casino saying, "Look at my retirement plan." You know what I mean? It's just pure idiocy. And listening to these people talk, I've never heard more uninformed investors. I've never heard more confident people that know less. It is like
it's 2021 creeping back in.
Yes. And we were sitting there talking about what is going, there's so few things similar right now with 2021, but then we brought up something that global liquidity is just ripping right now.
Yep. Mostly out of China. But then you look at, this is something we talked about a lot, but somehow a lot of people aren't paying attention to, which blows my mind. Well, most people don't care about global macro, I guess, but so many of the biggest countries in the world are doing really significant fiscal. And it's not like you're not getting monetary support there either. Globally, we're still cutting rates. So you end up with this really significant backdrop of global liquidity starting to like really, really move, mostly coming out of China for now. No idea if it keeps coming out of China or if they pull back. We'll know by the market. But whenever you see these environments where dumb stuff just comes unglued, you almost know, like, well, I bet liquidity is like really flooding in. And sure enough, like it is, and largely coming out of China. And their M2s, like M1, starting to like pick up in a way that it hasn't in like 2 years. Even in the US, if you could look at like 6-month annualized M2 here, that's unhooking the trailer a little bit, and it's at like a 3-year high. Bank credit in the US is like starting to take off. So like, which just turns right into M2 if you think about it. Like, so we have a lot of liquidity support really starting to backstop. And this is still with globally, at least, cutting rates. And in the US, we're trying to pressure the Fed into cutting 3%. Like, imagine what that would do to the global liquidity environment and the backdrop for the meme stocks and less well tethered equities out there.
We've been talking about
more
this,
speculative.
We've been talking about this for a while, and we had some false starts, but I'll say it again. If you're going to get really weird and this thing is going to get out of control and get really, I mean, I think it already is out of control, but I mean, I'm talking really nuts, like get me an S&P trading at 40, 50 times earnings, right? This could be the start of that. Meaning you've got all this global liquidity ripping. You've got markets attempting a breakout rally from these levels and these valuations already, right? You've got more trade deals. They're starting to drop like dominoes. Okay. You're going to cut this year. You're going to get at least one.
Yeah, I think September looks like a go right now for sure.
Yep.
Especially with the trade deals. I mean that.
Yeah, I mean this thing could be on the verge of getting really silly.
And you think about it, like the consumer stimulus of stocks where they are, just call it asset prices where they are, but also like oil being dirt cheap,
rates where they are.
It just there's a lot of tailwinds.
A lot of dry tinder
for the consumer, and usually like we're so used to the last decade of like, U.S. only game in town thing where you would suck in everything else too, but now you look over at everyone else doing fiscal too, and it's like that stuff's going up as well. So
well, and that to me is why I'm looking at this and not going to attempt to like change it on the face of it. Meaning I don't see things like this and immediately sit there and go, I'm going to push another 10% of the portfolio over here and out of the U.S. What I will say though is that I think all of these things that we're discussing is just adding fuel to the fire of saying, hey, the U.S. isn't where we want to be right now.
So we did a deal with Japan.
Ironically,
our market's up less than 1%. The Japanese market was up about 5%. Toyota was up 11% last I saw. Like it says a lot.
Yeah.
And you look at Vietnam since we did the deal with them, straight up. Like
well, and you just everybody is so U.S. market obsessed. You're going to miss it. Here we are sitting on, we're up 21 on the year in the value portfolio, right? And that's virtually, gold stocks have played a part, but a lot of it's been driven by international. It's not that hard. You're buying companies that are just dirt cheap, and everybody still says, I want to buy Kohl's, I want to buy Tesla. You're just like, good God, man.
Yeah, it turns out it's not that hard to not do dumb stuff and still do okay. Speaking of which, we have an airline that we own in Latin America, and interestingly enough, Lynn Alden wrote up that company in the last week.
Really? Why?
It caught me by surprise. Just same as us. Like it's just they
operate
well. They keep it simple. The balance sheet, the income statement, all makes perfect sense. The valuation's great. Like just the same exact conclusion we made. It was just a trip to see this, company that no one talks about ever, like get picked up by someone thoughtful.
Well, yeah, and just like I said, I just there's a part of being an investor that should be like being a tourist, right? There should be that part, which is, you're going to pull out your camera, you're going to walk around to parts of the world you've never been there before, and you're going to observe, and you're going to see, and you're going to look. And when you do that, you'll see what we've seen, which is, hey, I'm not looking at the U.S. and saying it's garbage, it's trash, it's going down, it's going in flames. But what I am doing is, as an investor, my job is to put my money where it's going to get the greatest return. And when you start doing those comps on an international basis, if you care at all about fundamentals and prices, right? I don't understand how 20 to 30% of your portfolio isn't spread out internationally at the very least. And if it's not, then you just don't care about valuations and prices. And you know what? You've been right for a good amount of the last 10, 12 years.
Unless all your U.S. money is in like offshore drillers or something.
Yeah, right.
Because it's the only place you're going to find it in the U.S.
Right. Yeah. And
or some terrible healthcare companies or something.
Yeah. Nobody wants to be there. So as far as the meme stock thing goes, we'll see how much legs this thing has. But when I'm looking at the board, I would expect liquidity to stay pretty strong based on what's driving it. I expect rates to come down here in the U.S. And looking at where you're at on the charts, hey, anything can happen. But and here's the thing. I just think that you're probably running. I think the biggest risk as a U.S. investor is you're going back to the well, running the same playbook you did in 2021, and you're not paying attention to what's going on overseas. You're not paying attention to the rips, these things, because we're still seeing it. Even though the U.S. market's been a little bit better, usually on I'd say 4 out of 5 days when the U.S. market's up, international markets are still up more.
Oh, VEU is definitely beating up, or S&P is definitely beating up VEU, the biggest ETF that holds ex-US stuff in the last, really since the ceasefire on trade. Like from that point, S&P is definitely beating the rest of the world, but not like handily though. The chart looks kind of bad, but then if you look at year to date where we're at, I think the U.S. is beating 9 of 45 countries. So it's still
a big laggard.
And then there, Greece is up like close to 60%, with the U.S. up like 8.
Poland up over 40.
So yeah, Poland up over 50 as well.
Oh wow!
And then you have all kinds of other places in Europe, and the charts are crazy. Like you look at the charts, they're all going straight up. And you're like, cool, it's going to pull back soon, right? And it's like week after week after week.
Well, yeah, but you're breaking through 15-year resistance.
I mean, I think Greece just got above 10 times earnings for the whole market.
Jeez. and just think about that. I mean, these companies a lot of these markets are coming out of a place that if you want to comp it to the US, there was one other time, and I'm forgetting. Well, no, I'm forgetting what it was. But you're coming out of a time in terms of comps, in terms of long-term performance for those markets, that if you put it in US terms, you can really only comp it from the period of 1929 to 1954, right? The Great Depression, where our market took 25 years to recapture those highs. These guys are breaking through highs that were set 16, 17 years ago.
Yep. A lot of the European countries broke through 08 levels this year.
And it wasn't like between 2000 and 2007 that international indexes kicked the living hell out of the US either, right? So it's not like it wasn't a retracement of some beautiful decade-long European outperformance. I don't even know if there's a decade you could say that in the last 120 years.
There is, but
I'm sure there is somewhere, but I mean, it's not, one of the biggest things
it wasn't the last two.
It's why I had to hold my breath or hold my nose when I started talking internationally. I mean, to be fair, we don't have a lot in Europe, but the meme that I have heard, and I've been doing this now almost 20 years, the meme I've heard the most in my career is you got to buy Europe. It's really cheap. Yeah.
But the other meme you always hear is that it's the largest outdoor museum in the world. So, with no innovation, et cetera. So,
yeah.
And those have kind of gone hand in hand. But, if you start throwing around 5% of GDP at defense and you mean it and you're building a bunch of equipment and you're selling some of it and, you start growing and things start working.
Yeah, at least in the short term, right? I mean, I think that one of the biggest issues you look at Europe and stimulus and fiscal and all that kind of stuff is going to help. They got policy problems there, though.
Even those, if you look hard enough, like a lot of that stuff's getting better.
Are they dealing with some of those issues?
You're getting better, energy policy, things like that.
Well, and it actually makes sense because if we're talking about
still bad in a lot of places, but
but if you're talking about the end of globalization the way we know it, I think in kind of a perverse way, we were anesthetizing a lot of their bad policy decisions because they didn't have to worry about defense spending. You know what I mean?
Right.
And if they've got to worry about defense spending all of a sudden, they're going to have to look at tax revenue.
And they didn't have to worry about energy until the invasion of Ukraine. Now they do. Like it just they've had like 5 wake up calls all in the last 5 years.
Yeah, because now all of a sudden you've got to worry about pretty big expenditures. Like Europe's always kind of thumbed our nose at us. Oh, your people, you got to pay for college, you got to pay for medical, and you're like, well, yeah, because we have to pay for defense, right? Now you do too. In a weird way, I would expect that. Actually, not weird. You see it a lot of places around the world. I think you could say the same for the Argentinian and Brazilian dynamic too, right? Which is no matter how far left Brazil is, assuming they can get somebody decent elected, right? Which is a big assumption, but I think that assumption gets more and more likely when you see the comparable performance of Argentina via the policies there. My point is this: when you get to a place where you've got inflation running at 80%, 100%, 400%, I think Argentina was up to 900 at one point. When you get into situation or flip around to Europe, now all of a sudden they do have to pay to. When you get injections of hard reality like that, a lot of the idealism that exists in the political system is forcibly exited.
Yeah, which I think we've seen a lot of there in the last 2-3 years.
Yeah. And so now
the sunshine and lollipop candidate doesn't make it anymore.
No. And when that's what is exciting to me, not just because those things are beat down, not just because they've been beat down for so long, not because most of them are coming out of earnings troughs, but also the policy changes. right? You add all that together. And when you look at the starting point for so many of these markets, you're kind of sitting there going, how does that, if they continue pursuing the policies they're pursuing, I don't know how that market doesn't double over the next 2 to 3 years.
Right.
And still be cheap.
I mean, that's Greece. Greece is the best performing, I think, in the last 2 years, 3 years. And like I said, it just broke through 10 times. So
yeah. And they're still cheap. Yep. That's what we're saying. Anything else you got to add? I'm pretty much spent for the day.
Nope, I think we're good.
All righty, you guys. Well, as always, follow us on social media. Go onto YouTube, get the video feed. Just search Know Your Risk Podcast, knowyourriskpodcast.com. Get us on Twitter at KYR Radio. I don't know why that thing wasn't switching back.
We got a good shot of me drinking my coffee there.
Yeah, well, the folks are going to
Maybe I was doing it so loud that the mic picked it up. I don't know.
Folks are going to love that. So anyway, you guys know the deal. We'll be back again tomorrow. As always, we'll see you then. Have a wonderful evening. You're listening to Know Your Risk Podcast. Download and subscribe at knowyourriskpodcast.com.
Investment advice cannot be given without a client service agreement. Zach Abraham is an investment advisor representative of Trek Financial, an SEC registered investment advisor. Bulwark Capital Management is a marketing name only and does not carry a separate registration.